Okay, it looks like we still have some people coming in, but for timing purposes, we're gonna go ahead and get started. Good afternoon, everyone, and welcome to today's webinar. My name is Megan Peasley, and I am the Iowa SourceLink Program Coordinator at the University of Northern Iowa's John Papa John Entrepreneurial Center. Here, we work with the Iowa Economic Development Authority to bring the Iowa SourceLink platform to all business owners. Whether you're looking to start, grow, fund, or even exit your business, Iowa SourceLink is here to help you. We provide step by step guides, make helpful referrals to our nearly 400 partners, and house the Business License Information Center. We also have the pleasure of presenting these webinars in partnership with the Iowa Department of Revenue. In today's webinar, Tyler Ackerson will be providing information about the law changes related to the Iowa Department of Revenue as enacted during the 2025 legislative session. Before we get into that, I have a few housekeeping items. First, today's webinar is being recorded and will be available within the next week. You will receive a link to today's recording in the same email that you will receive as proof of your attendance. The slides for today's webinar will be shared momentarily in the chat by Haley Ham. Haley and I will be sharing other resources and contact information if and when they're brought up during the webinar in the chat box. As for questions, please enter them into the Q&A box located in the bottom half of your screen. We do ask that you focus on asking general questions that could apply to everyone. If you have a question specific to your situation, we recommend that you talk to the Department of Revenue directly. We are going to hold off on answering any questions that come in till the very end, and if we don't get to all of them, Tyler is going to receive a list of them and be able to follow up with you. We do ask that you don't ask the questions anonymously. It's just going to be Tyler, me, and Haley being able to see those, and if we don't get to all the questions, if you ask them anonymously, we won't be able to follow up with you because we won't have your contact information of who asked that question. And with that, that's all the housekeeping items I have. So Tyler, I'll let you take it away.
Well, thanks, Megan, and thank you to you and Iowa SourceLink for hosting me today. I'm glad to be here. And thanks to everybody that is taking a little time out of their day to join us here this afternoon. I hope you'll find this presentation informational and useful. Before we get started, I also have a couple of housekeeping items to share. The first is just a disclaimer that the information that I'm presenting today is not binding upon the department. So the information and any opinions that are shared, they're only applicable to the factual situations that are referenced and to our statutes that are in time or in existence as of the date of this presentation. And the department could take a contrary position in the future to what is stated today. Also want to take a moment to plug our GovDelivery communications service. This is the platform that we use to send out updates that are relevant to the department. So these could be tax updates, policy changes, important deadlines, and also things that are related to legislative changes. So this is definitely something you want to be subscribed to so that you're getting all of this information from the department. There are a couple of ways to do that. You can visit our main website, which is revenue.iowa.gov. I have a link there. If you scroll down from the homepage, you'll see this picture that I have here. It says subscribe to revenue updates. You just click that button and you'll be taken to where you can do that. To make it a little easier, I've also included a direct link here in the slides. So once you have those, you can also click that direct link and go and get signed up. Another thing to know with GovDelivery, you can choose how much you want to receive from us. So we have various topics that you can subscribe to. So you can choose to subscribe only to those things that are relevant to you, or you could choose to receive all of the updates that we send out. It's up to you. But either way, please do subscribe so that you're getting all of this information from us. So with that, These are the bills that we want to cover today. In total, there are 10 pieces of legislation that I will review as a part of this presentation. Again, this is only going to be a high-level overview of those pieces of legislation. If you have specific questions related to them, we'll try to answer them as a part of this, but it may require some additional follow-up afterwards. Overall, I would say that the 2025 legislative session was a little lighter on tax-related changes than perhaps we've seen in the past few years. The predominant tax type that was part of the conversation this year was property tax. The legislature, the chairman of the Ways and Means Committees put forward a property tax reform bill. And that was talked about and iterated upon throughout the duration of the session. Ultimately, lawmakers felt that there was more work that needed to be done on that piece of legislation. So that did not pass this year, but I think it will most definitely be an ongoing topic of conversation next year. The other significant piece of tax-related legislation this year came from the Iowa Economic Development Authority. They had an omnibus bill that was making multiple changes to tax credit programs that are administered by them. And we'll go into that during the presentation. As a reminder, we have alcohol topics and lottery topics that we want to talk about today. Back in July of 2023, as a part of state government alignment that took place that year, the Department of Revenue became responsible for alcoholic beverage regulation and lottery operations, in addition to our tax duties. So we will be covering those topic areas today as well. So I want to start with tax first, and a number of these bills that I'm going to cover, I mentioned that we had 10 pieces of legislation. 7 of those actually came from the department this year. Those were pieces of legislation that contained proposals that we had put forth during the 2024 legislative session. Those proposals ultimately did not make it across the finish line, so we refiled for the 2025 session, and pleased to say that we were able to get those accomplished during the session. So where these are pieces of legislation from the department, I will note that. And Senate File 605 starting here is one of those. And I will note that on each of these slides, the bill number is hyperlinked, so you can click that to go directly to the piece of legislation and see the actual bill text if you are interested. So Senate File 605, this was a bill from the department. This is related to sports wagering. It does a couple of things. The first is that it's clarifying that all winnings from sports wagering are subject to state and federal income tax laws. This is not a change in policy. This is just adding clarifying language that explicitly states this. This is the same for other types of gambling activities, and so this is just adding it for sports wagering. The main change associated with this bill is requiring state income tax to be withheld from winnings from sports wagering whenever federal income tax is required to be withheld. So we are coupling withholding from sports wagering winnings with the federal requirements. So right now, those federal requirements are that the amount of proceeds from the wager is more than $5,000 and is at least 300 times as large as the amount wagered. So that's the current requirement at the federal level, and we are coupled with that. So that's what it is at the state level as well. And if there are changes made in the future at the federal level, then we will correspond with those changes without having to actually change our law. Just a reminder that the state withholding rate is 3.8%, following our movement to a flat tax rate. So that is the withholding rate at the state level. This is not effective until January 1st of 2026. So it does have a delayed effective date to coincide with that new tax year. Senate File 606, this is also a piece of legislation from the department. This is in relation to electronic filing of sales tax returns. So back in 2022, there was an electronic filing requirement put into the law. That coincided with our launch of GovConnect Iowa, our tax administration system, and the first rollout of that system, which accepted sales tax returns electronically. So we've seen great success with the filing of sales tax returns electronically since then. However, we do still have a sizable amount of returns that are being paper filed when they are otherwise subject to the electronic filing requirement. So this piece of legislation is an attempt to try to get those final folks into filing electronically as they are required by the law. So specifically what this bill does is to establish a penalty for paper filing of sales tax returns when the taxpayer is subject to the electronic filing requirement. So those paper filed returns will be treated as not filed at all. And this will result in the department estimating the amount of tax due, issuing a billing with the addition of a penalty of 5% of the tax due. And then that's along with any other applicable penalties and interest. As a reminder, filers who are unable to file electronically may request permission from the department director to file using another method. This is already provided in Iowa code, and you have the specific section there. That was put in place back in 2022 at the same time that the electronic filing requirement was put in place. Nothing has changed with that. That is still an option that is available. This particular bill was effective upon enactment, so that means effective when the governor signed the bill. That was back on May 6th, 2025. Senate File 612, this was a department piece of legislation, but it was introduced as something dealing with a tobacco-related topic. But as happens during the legislative process, there were some other provisions added to the bill. One of those is tax related, and so that's why I put it under the tax column here. You'll also see it again when we get to our tobacco bills that we're covering. But specifically here for tax purposes, we're talking about Division 3 of the bill, and this is related to the historic preservation tax credit, making a change to allow 100% refundability of that credit for tax years that are beginning on or after January 1, 2025. The change itself was effective on July 1st of this year, and then it applies retroactively back to January 1st of this year. Senate File 619, this is a bill that came from the governor herself. It is a multi-division bill with the focus of making some changes related to natural disasters. So a lot of the provisions cover that, but there are a few tax-related provisions within the bill as well that I want to highlight here. The first is there is an exemption provision that is exempting interest and dividends from bonds that were issued as a part of the Natural Hazard Mitigation Financing Program. The interest and dividends from those bonds is exempt from state income tax. This provision was effective July 1st of this year. And then there's also a piece related to the state disaster recovery new housing grants that were issued. So these were grants that were issued to individuals or businesses by the Iowa Economic Development Authority. And what this provision is doing is exempting the amount of those grants from individual and corporate income taxes. So these have to be what the bill defines as qualifying grants. And what that means within the bill is grants that were applied for between August 20th of 2024 and December 31st of 2024, and that were ultimately approved and issued by the Economic Development Authority. Again, this was an effective upon enactment provision. So when the governor signed the bill, That was back on April 22nd of this year. The change itself is retroactive to tax years beginning on or after January 1st of 2024. And then these provisions are repealed on January 1st of 2028. If you have questions about these particular grants, you'll need to reach out to the Iowa Economic Development Authority for those questions. And as speaking of the Economic Development Authority, as I mentioned in my intro, there was a piece of legislation put forward by them to make some changes to the tax credit programs that are administered by them. That piece of legislation is Senate File 657. The impetus behind this was, according to Director Durham, that the state of Iowa now has a more favorable tax climate. And so the amount of incentives offered through these various tax credit programs are perhaps not as needed as before. And so overall, these are intended as a reduction to the overall amount of tax credits that are available. Do really want to emphasize that this is an Economic Development Authority piece of legislation. These are Economic Development Authority programs that are administered by them. So I, again, am going to just give a high-level overview of the changes here. But if you have specific questions about any of these particular programs, you will need to reach out to them. They'll be able to help you much more than we will here at the Department of Revenue. Excuse me. So the first program receiving changes is Division 3 of the bill. This is the Business Incentives for Growth, or BIG program. You'll see that Economic Development Authority is really good at creating acronyms for their programs. They do a great job of it. So the BIG program includes sales and use tax refunds. So this is establishing a sales and use tax refund for gas, electricity, water, and sewer utility services, tangible personal property, or on services rendered, furnished, or performed to or for a contractor or subcontractor used in the fulfillment of a written contract for the construction or equipping of a facility that is part of the eligible business's project. Any taxes that are attributable to intangible property and furniture and furnishings shall not be refunded. Applications for these refunds have to be submitted to the Department of Revenue, and they can be submitted no more frequently than quarterly on forms and in the manner determined by the department. That will likely be electronically. And then a note here that interest does not accrue on any refund request associated with these sales and use tax refunds. Another piece of this BIG program is a qualifying investment tax credit. This is a credit that's allowed against individual or corporate income tax, the franchise tax, and the monies and credits tax. It is amortized to the eligible business over 5 tax years. It is a refundable credit, or the excess can be carried forward to the immediately succeeding tax year. It cannot be carried back to a tax year that's prior to the tax year in which the credit is first claimed. Overall, this is a program that is replacing the prior high quality jobs program. So that is being phased out and will be eliminated on December 31st of this year and replaced with this BIG program. Another change is in Division 6 of the bill, and this is creating the seed investor tax credit. Again, this is administered by the Economic Development Authority, and for tax years beginning on or after January 1st of this year, allows a tax credit against individual income, corporate income, franchise, insurance premiums, and monies and credits taxes for a portion of a taxpayer's equity investment in a qualifying business as defined. So that is a defined term within the bill. The amount of this particular tax credit is, it varies based on where the business is located. So if it's located in an urban area, The tax credit is 20% of the taxpayer's investment. If the qualifying business is located in a rural area, it's a 35% credit. And overall, the maximum amount of the credit for a taxpayer is $100,000. This particular credit is refundable, or the excess may be carried forward to the immediately succeeding tax year. Cannot be carried back to a previous tax year, though, and this tax credit cannot be transferred. Similarly to the last program we talked about, this is replacing an existing program. So this is replacing the Investments in Qualifying Businesses Tax Credit Program, more commonly referred to as the Angel Investor Tax Credit. And this particular credit is effective as of July 1, 2025. There are a couple of credits in this bill that have not seen much use, and therefore they are being eliminated. The first of those is in Division 10. It is the Employer Child Care Tax Credit. The change in the particular bill does allow the credit to remain available through the tax year beginning on or after January 1, 2025, but it has to be before January 1 of 2026. And then the credit is repealed for those tax years that are beginning on or after January 1 of 26. Similarly, in Division 11, the Assistive Device Tax Credit. This credit remains available through the tax year beginning on or after January 1, 2024, but before January 1 of 25. And then the credit is repealed for tax years that are beginning on or after January 1 of 26. The change itself applies retroactively back to January 1st of 25 for tax years that are beginning on or after that date. Probably one of the most significant changes in this bill is around the research activities credit. Right now, that is a credit that is administered through the Department of Revenue. And the two changes we'll cover in the next couple of slides are setting up the repeal of that particular tax credit and then the transfer of it over to the Economic Development Authority. So Division 13 of the bill allows the existing research activities credit to remain available through the tax year beginning on or after January 1, 2025, but before January 1, 2026. There is also a change in here to move up the date associated with the amounts paid for supplies not being qualified research expenses. So under current law, prior to this change, that was January 1, 2027. This is moving that up a year to January 1 of 2026. And then the credit itself is repealed from the statute for tax years beginning on or after January 1, 2026. So as I mentioned, the next division of the bill, Division 14, this is establishing a new research and development tax credit program. This is under the Iowa Economic Development Authority. It will be administered by them. It is a little bit different in how it works versus today's credit. The credit itself is going to be available for tax years beginning on or after January 1, 26. With this new tax credit program, businesses seeking this credit will have to apply to the IEDA, and they will have to be certified as a qualified business by IEDA to be eligible for the credit. The credit itself is capped at $40 million, and so it will be distributed based on the number of applicants that are certified as qualified businesses by IEDA. Important to note that a business cannot claim the previous research activities credit and the new R&D tax credit on the same tax return. This is explicit within the bill. The R&D tax credit, so the credit under the new program, must be claimed in the tax year immediately following the tax year during which eligible expenditures were incurred. The R&D tax credit applies to individual income and corporate income taxes. The credit itself is refundable, or the excess may be carried forward to the following tax year. And then important to note that the certificates that IEDA issues for this credit are not transferable. So big changes coming to this particular credit. I know it's important to a lot of industries here in Iowa. So again, questions on this need to be directed to IEDA about important information about how they're standing up this new tax credit program. Also new within the bill, Division 15 is creating a sustainable aviation fuel production tax credit. So this is another program, tax credit program, that'll be under IEDA. And this particular credit is available for fuel that's produced during particular calendar years. So this fuel has to be produced during calendar years 2026 through 2035, excuse me. This does require an application. Those applications are submitted to IEDA. They have to be made during the calendar year, following the calendar year in which the fuel is produced. So there are important dates associated with this. Under the bill, IEDA cannot issue tax credits before July 1, 2026, and taxpayers cannot claim credits before September 1st of 2026. The credit itself is allowed against individual income and corporate income taxes. It has to be claimed for the tax year during which the business was issued the tax credit. It is a refundable credit, or the excess can be carried forward to the following tax year. And again, those certificates that are issued for this particular credit by IEDA are not transferable. This credit itself is repealed on January 1st of 2037. So it does have an end date. All of the provisions for this particular tax credit are retroactive back to January 1 of 25 for tax years that are beginning on or after that date. Later in this particular bill are a couple of cleanup items related to existing tax credit programs. So the first is in Division 16 related to the Major Economic Growth Attraction Program, or the MEGA program. Again, great acronyms. So this was a program that was created through legislation last year. It applies to very large projects. So there has to be a significant size of the project itself in terms of the land that it's located on. And there also has to be a significant investment of money related to this program. That lends itself to the name of MEGA. But overall, the change that's being made in this legislation this year is just tweaking a few things to that program, and that is requiring the eligible businesses to submit applications for sales and use tax refunds no more frequently than quarterly. And then it also changes the remittance of refunds from equally over 5 years to as soon as practicable after completion of an audit by the Department of Revenue. And this change was effective on July 1st of 2025. There was a change made to the research activities credit. So this is the existing credit today, and it has to do with who can qualify for that credit. So it amends the existing research activities credit statute to allow a person who's engaged in both agri-science research and agricultural production to qualify for the credit, provided some very specific requirements are met. Those are detailed in the bill. I don't have them listed here. But overall, this is a change that was effective on July 1 of 2025 and is retroactive back to January 1st, 2017 for tax years beginning on or after that date. And then finally, there is a slight change to the E15 promotion tax credit. So this was originally set to expire January 1 of 2026. The bill bumps that out 2 years, and it will now expire on January 1st of 2028. And the change itself was effective on July 1, 2025. So again, this is a piece of legislation from the Economic Development Authority. Nearly everything within here that you have questions about, I think you will have to direct to the IEDA, and they'll be able to provide much better answers to that than we can here at the department. Next bill that we want to cover is House File 976. This is an omnibus bill put forward by the department. So this is a multi-division bill, and really is more technical in nature and cleaning up some things in various areas of tax administration. So the first is Division 1 is dealing with disclosure of tax information. So we have a couple of changes here. The first is now we will be allowed to release confidential taxpayer information to law enforcement if there's an indication that a taxpayer has willfully failed to file or committed a criminal offense under Title 10 of the Iowa Code. Before, we've had some situations where law enforcement believes or has an indication that a taxpayer has willfully failed to file, but due to our strict confidentiality of taxpayer information, we were not able to share that. With this change, we will be able to share that. In a similar vein, we will now be able to share confidential taxpayer information with the state treasurer for the limited purpose of assisting in identifying the apparent owner of unclaimed property. So the state treasurer had a bill last year allowing him to try to proactively match unclaimed property with the supposed owners of that property. And this change will allow us to provide limited taxpayer information to assist in that, just to help identify that person. Both of these provisions were effective upon enactment, which was back on June 6th of this year. Division 2 is removing a reporting requirement for the department. We have been required to submit an annual report to the legislature showing all areas of recurrent taxpayer noncompliance. We believe that we bring those areas of attention to the legislature in other forms rather than an annual report. So we have asked that this report be eliminated. The legislature agreed to that. So effective July 1, 2025, this report will no longer be required. Division 3, a couple of changes in the area of property tax. So the first is removing the department's authority to receive and pay late property tax credit claims. Those claims can be filed instead with the claimant's respective county treasurer. Overall, that should work better for the taxpayer, be able to work directly with their local officials and be closer to those folks. That was effective on July 1st of 25. And then we are also clarifying a statute of limitations. So there is a 2-year statute of limitations that applies to appeals of central assessments. And when those appeals are made to different entities, the code was silent about appeals that are made to the department director. So we have clarified that, that same 2-year statute of limitation applies in those instances. This particular change was effective upon enactment, which was on June 6th. Division 4, this is related to the farm tenancy income tax exclusion. So a couple of changes here, just clarifying that the definition of the term held for purposes of determining the holding period. So we're clarifying what that term means in the statute. We are also clarifying that when it's talking about 10 years of material participation, that means 10 years in the aggregate. Both of these changes were effective July 1 of this year. Division 5 is just a clarifying change related to pass-through entities. So this is clarifying that The limitations on appealing an estimated notice of assessment also apply to a pass-through entity that has issued an estimated final notice of adjustment. This is clear for other types, but it was not as clear for pass-through entities, and so really we view this as just a clarifying change. The change itself was effective upon enactment, and it does apply retroactively back to January 1 of 2024. We do have a few changes related to sales tax in Division 6 of the bill. So the first is, again, another clarifying change meant to help make it easier to understand when sales tax is due on building materials and supplies. I do want to emphasize that we made no substantive changes to when that tax is due on those materials and supplies. The previous statute was long and confusing and hard to read. We broke that up a little bit and have tried to make it easier to read and understand. So really just a clarifying change, not a substantive change. And then we have also changed the filing frequency for direct pay permit holders from semi-monthly to monthly. That catches us up with changes that were made for filing frequencies for sales tax overall. So with that move from semi-monthly to monthly, we also updated our tax thresholds. So it goes from $4,000 up to $8,000. Both of these changes were effective on July 1st. Division 7, we have a few changes related to motor fuel taxes. The first is giving us clear statutory authority to recalculate fuel tax rates if there is a mistake in the calculation or there's a late report that's filed that could impact the calculation. So just giving us that authority to ensure that when we're calculating these fuel tax rates, that if there's something that's throwing that off, we can account for that and get the truly accurate rate published. And then we're also clarifying that those fuel reports that we use as a part of this process, if they're not filed timely, they are subject to a monetary penalty. Before the statute was quite clear that if they weren't filed at all, that there was a monetary penalty. This clarifies that if they're not filed timely, that penalty also attaches. For our electric fuel dealers, they have 2 6-month reporting periods that they have to report on, and then they have a due date for those reports. So for that second 6-month period, the statute had the end date of that on December 30th. We moved that one day to correspond with the true end of the month. So that's on December 31st. And then the actual report due date is now being moved one day to the true end of January as well. So just to fixing that discrepancy there. Then finally, also related to electric fuel, we are clarifying that a purchaser of electric fuel may provide an exemption certificate when the fuel is sold or dispensed for a non-taxable purpose. An example of that would be a sale to a city or a county. And all of these changes are effective on July 1st. Division 8, this is a cleanup that is tied to the elimination of the inheritance tax. So there are references to chapters 450 and 450B of the Iowa Code. We are removing those references because those are tied to the state inheritance tax, which has been repealed. Division 9, this has to do with lump sum distribution of retirement income. So we are excluding those lump sum distributions of retirement income from Iowa taxation. This was effective upon enactment, so the date that it was signed, which was June 6th, and does apply retroactively back to January 1st of this year for tax years beginning on or after that date. Division 10, we are modifying the estimated tax threshold. So we are increasing that threshold to make estimated income tax payments. We're bumping that up from $200 up to $1,000. This is a forward change, so it has a delayed effective date. This will be effective on January 1 of 2026, and it applies to tax years that are beginning on or after January 1 of 2026. Division 11 has to do with our statutory requirement to do evaluation studies of certain tax credit programs. So there is a list of programs in the statute that we're required to do evaluation studies on. That list has or had some tax credit programs that were expired or had been repealed. So we went through and cleaned up those credits from the list. And then we've also inserted some clarifying language that future review is not necessary for any tax credits that are still listed but are repealed or expired. So the specific credits that we removed, the Iowa Fund of Funds, the wind energy production tax credits, ethanol promotion tax credits, and the minimum tax credit. So this is effective July 1. Then I apologize, this may be a little hard to see, but this is one of the final divisions of the bill, and has to do with the sales tax exemptions and refunds, excuse me, that are related to web search portals, web search portal businesses, and data center businesses. So one of the changes here is there is now a limit on the sales tax exemptions and refunds for electricity and backup fuel. These limitations apply to new or expanding web search portals, web search portal businesses, and data center businesses. So if they are new or expanding one of those types of businesses, these sales tax exemptions expire 10 years or 15 years out into the future, and that is dependent upon where the entity is located. So if they are in an urban area, these will expire after 10 years, and if they're in a rural area, they will expire after 15 years. The revenues that are eventually collected from the expiration of these exemptions, they will be transferred to a fund called the Energy Infrastructure Revolving Fund. That is an existing fund that is used to provide funding for energy infrastructure. So in conjunction with that future elimination of these exemptions and refunds, there will now be an annual reporting requirement. So these web search portals, web search portal businesses, and data center businesses will be required to register with the department now, and they will have to file an annual report by January 31st of 2026, and then by each January 31st thereafter. And that report is required to describe the backup power generation fuel and the electricity that was purchased and used in the previous calendar year. And also these web search portals, web search portal businesses, and data center businesses will be required to present an exemption certificate to retailers when they're purchasing backup power generation fuel and electricity. They will be issued this exemption certificate annually after they file that annual report that I just described. So we are working through the specifics of this process and hope to have some more information to share soon. I would again plug getting signed up for our Gov delivery updates so that if this is an area that is important to you, that you make sure you get those updates from us as they are released. And then there are a couple of clarifying changes within this particular division as well. So the first is clarifying that the incentives for our data centers, they include leasing arrangements. So this was not clear in the statute before. The legislature has made that clear now. And also the term site preparation activities is being defined through this change for the purpose of data centers. That term site preparation activities is important because it is linked to when a lot of these incentives for data centers start. So clearly laying out what constitutes site preparation activities for those purposes. All of these changes were effective upon enactment, which was on June 6th of 2025. So transitioning away from tax, do have a couple of tobacco-related bills to share with you now. The first is a bill put forward by the department, and this is Senate File 604. This is making a necessary change to the definition of the term units sold for purposes of administering the overall tobacco master settlement agreement that's in place. This is needed to ensure compliance with that agreement and some other settlement arrangements associated with it. This change was effective upon enactment, so that was on May 6th. And then Senate File 612, which we had talked about earlier in the presentation. As I said, this was originally a tobacco-related change, single subject bill, and then some other stuff got added to it. This was the primary change that we were seeking with this legislation, though. Division 1 is putting in place an electronic filing requirement for all applications, fees, reports, returns, remittances, and other tobacco-related documentation that's under Iowa Code Chapters 453A and 453D. So this coincides with the launch of Rollout 4 of our GovConnect Iowa system. That launched back in November of 2024. We integrated into the system the ability to apply for tobacco-related permits, make payments, and submit documentation related to tobacco. And so all of that is built into GovConnect Iowa. And now all of that will be required to be submitted electronically to the department using that system. If there are submissions that are made where there's no tax due shown, and those are made in a manner other than electronically, those are subject to a penalty of $50. So again, making sure that folks are filing electronically to avoid that penalty. And then similarly to what we see on the sales tax side, those who are unable to file electronically may request permission from the department director to file using an alternative method. So this was effective on July 1st, 2025. And then, as I'd mentioned before, do want to cover alcohol related legislation as well as lottery related legislation, as those are new responsibilities under the department. So the main bill with alcohol changes this year was House File 470. This did start as a couple of changes being put forward by the department, but like it happens in the legislative process, there are a few other concepts added to it. So it is a two-division bill. Division 1 and all of the changes that I'm about to flow through, they were effective upon enactment. So that was on April 25th. The first change here is a clarification that the state of Iowa and its instrumentalities can hold alcohol licenses and permits. This is something that's been occurring. For example, we have the state fair going on right now. The grandstand there, they hold an alcohol license to engage in retail sales of alcohol. At the Iowa State University, there is a beer manufacturing class that is taught. So they hold a beer manufacturing permit. So just clarifying in the law that the state and its instrumentalities can hold these alcohol licenses and permits. The next change within here has to do with our native distilleries. These are distilleries that are engaging in the distillation of spirits here in the state. At the federal level, non-contiguous locations have been allowed for quite some time. What that means is that you could have your production facility in one spot, and then non-contiguous to that, some distance away, you could have, for example, a warehouse where you are barrel aging product. That was allowed under federal law. It was not allowed under state law. So this has brought us in line with federal law and allowing these native distilleries to have those non-contiguous locations, provided they are approved by the federal TTB. That is the Federal Alcohol Regulatory Agency. The next change is removing the bonding requirement for Class A and Special Class A beer permittees and Class A wine permittees. So these are native breweries, brew pubs, beer wholesalers, native wineries, and wine wholesalers. All of those businesses, as a condition of getting their license, needed to post a bond. That requirement has been removed. The definition of the term mixed drink or cocktail has been amended and expanded. This now includes wine and beer-based drinks. Before, that was specific to liquor-based drinks. So this is really meant to address the rise in popularity of wine slushies, and believe it or not, beer slushies as well. These are new alcoholic beverage concoctions, if you will, that are gaining popularity in the market, and the law did not directly address them. So now it does through this expanded definition of this term. We do have some guidance that's posted out on our website, and I have a hyperlink here if it's something that's relevant to you. This piece of legislation also codified some of our administrative rules around the pre-mixing of mixed drinks or cocktails that are not for immediate consumption. This is commonly referred to as infusion. This is when retailers are making big batches of drinks ahead of time to then be served when somebody orders them. Previously, the specifics of that were laid out in administrative rule, and now they have been codified instead, so they're in statute. And then another pretty significant change in this piece of legislation is around open containers of beer and alcoholic liquor, and allowing those to be carried off of a licensed premises and taken to one of three immediately adjacent places. So either another licensed premises, a temporarily closed public right-of-way, or a private place. We do have more information on this on our website. We have a dedicated webpage to it, lays out more specifics around this, and tries to provide some visual depictions of what this looks like and what's allowed. So if that is of interest to you, I have a link here in the slides. So that's Division 1. Again, all of those changes that I talked about are already effective. Division 2 is not effective until November 10th of 2025, and this is coinciding with our 5th and final rollout of GovConnect Iowa, which is integrating all of alcohol licensing into GovConnect Iowa. So as a system, GovConnect Iowa wants to use USPS verified addresses. And so what this change is doing is making it clear in the law that if there is a premises that's to be licensed with a retail alcohol license, and that's outside of an incorporated city, then the address that is to be used for that has to be based on the city that's in that location's USPS verified address. So this will be beneficial not only from giving us precise addresses, but it will give us consistency across the types of licenses and permits that we issue via GovConnect Iowa. So think sales tax permits, retail tobacco permits, retail alcohol licenses. having all of those with the same address and uniform information across them. That'll make it easier for administrative purposes and also regulatory purposes as well. This does only apply to licenses that are issued on or before, or I'm sorry, after November 10th of 2025. If you have a license that's issued or renewed before November 10th, then you will maintain your premises city that's already associated with that license until it is ultimately renewed the following year. And then there's one other alcohol bill I do want to highlight here, and this is House File 994. This is related to beer barrel tax and wine gallonage tax. So those two types of taxes were previously due on a monthly basis. The change in this bill is allowing the holder of a Class A beer permit, a special Class A beer permit, or a Class A wine permit to pay those taxes on a quarterly basis. In order to qualify for that, the permit holder has to reasonably expect to not be liable for more than $2,500 in that type of tax between July 1 and June 30th. And then they must not have owed more than $2,500 in tax in the preceding July 1 through June 30th timeframe. So very specific amounts that have to be met and timeframes here. Then the bill is also setting this quarterly reporting and remittance schedule to align with the state fiscal year. So that's why you see July 1 through June 30th. This was a change that was sought by the industry to more closely align us with the federal beer tax and wine tax reporting and remitting schedules for smaller producers. So we will be more aligned with that. This is not effective until January 1 of 2026. That is in part to allow us to build that into Rollout 5 of GovConnect Iowa and make sure that that's ready when we launch that new system and not have to make updates to our existing system. So this does have a delayed effective date. And then lastly, do want to cover just one lottery bill, and that is House File 260. Overall, this is a bill that is primarily making changes to our internal processes and our operations to further increase our efficiency and effectiveness following state government alignment in 2023, which I had mentioned before. But there are a couple of provisions in here that I want to highlight just because we feel they are important in maintaining the integrity of the Iowa lottery and the trust that players can have in the fairness of the lottery. So the first is a prohibition on all department employees and certain family members that are residing in the same household from playing the lottery. So effectively, all department employees cannot play the lottery, and then certain family members that reside with them are also prohibited from playing. When the lottery was a separate entity prior to alignment, all people who worked at the lottery were prohibited from playing. We felt it was important, again, to extend that to the entire department just to reinforce the integrity of the lottery and the fairness, and that people can believe that it is truly a fair system. And similarly, the second change I want to highlight has to do with certain lottery-specific records that are now going to be confidential. There were some well-funded groups that were using the public records request process to request certain records, and they would use these to basically determine when when there were big prizes remaining and where the best place to buy those tickets to win that prize were at. So really not an illegal operation at the time, but certainly not a fair way of playing the lottery. So we have made some specific records that they were using confidential. Do want to note that this does not impact the availability of our lottery game rules, our overall game odds, and the prizes that are remaining to be won. That's still public information and will continue to be provided. So I see I've run up right against our hour mark, so I do apologize. I don't know that we'll be able to take questions, but like Megan said, if you did ask a question in the chat, she will get that to me, and I will try my best to follow up with you in a timely manner. Thank you so much for joining today. I really appreciate everyone being here, and I hope that you found this informational and useful.
Thank you again to Tyler for sharing this information with us today regarding tax update. As a reminder, this webinar was recorded and will be available to watch on our website or by searching Iowa SourceLink on YouTube within the next week. Just like Tyler said, if your questions were not answered today, I will be sending all those questions to him and he will be following up with you. As a reminder, Iowa SourceLink does not provide a continuing education certificate for your attendance here today. We do, however, send out an email to all those who participated within a few days after the webinar concludes that you can use as proof of your attendance. Our next Iowa Department of Revenue webinar will be held on September 10th at noon Central Standard Time. This webinar will provide an overview for Iowa taxpayers of the Department of Revenue's general processes. Check out the registration link for more information. Additionally, in the month of September, Iowa SourceLink will be hosting a succession planning webinar series. Whether you plan to exit your business in a month or in 20 years, this series will help you secure your business's legacy. Visit iowasourcelink.com and navigate to our webinar page to sign up for any of these webinar sessions. Until next time, have a great rest of your day.